All right, let's dive right in. The market is seriously on edge this morning, and it's all being driven by three huge stories that broke overnight. We've got a critical deadline in the Strait of Hormuz getting a last-minute reset. We have a major U.S. stock index flashing a huge warning signal. And on top of all that, a new tariff shock is literally just days away. Let's break it all down. So the big story you just can't miss this morning is that the markets, and I mean especially the tech sector, saw a full-blown bloodbath on Thursday. This wasn't just, a bad day. It was a structural break that has traders on high alert. And this is the number that really has everyone's attention. The Nasdaq 100 is now officially down more than 10% from its all-time high. And that, my friends, puts the index squarely in what we call correction territory. So, what in the world is driving this thing? Well, it's not just one thing. It's really a cocktail of fears. And it all started with a major geopolitical development that sent absolute shockwaves through the oil market. Okay, first up, let's talk about Iran. The diplomatic clock just got a reset. The deadline for action in the Strait of Hormuz, which was supposed to be this Saturday, has now been kicked down the road to April 6th. But let's be crystal clear. This is not a deal. It's just a delay. The risk is very, very much alive.
So why the extension? Well, on Thursday, Iran let 10 oil tankers slip through the Strait. They called it a goodwill gesture. Of course, the White House immediately took a victory lap, with the president posting this, quote, basically tying the deadline extension directly to that move.
And wow, just look at the absolute chaos this created. After news broke that Israeli airstrikes had killed a key Iranian commander, Brent crude just exploded $10 higher, shooting from around $98 all the way to $108. Then, as soon as the extension was announced, the price just collapsed, right back down to $99. That is a massive $9 round trip in one session, and it just shows you how incredibly nervous this market is.
So here's the bottom line. The mines are still in the water, and shipping is still incredibly restricted. The old deadline is gone, sure, but April 6th is now the new, hard binary date that the entire energy market has circled in red.
And this really lays out the two paths from here, right? It's pretty black and white. If we see more tankers moving through, it signals that goodwill gesture was for real, and that war premium in oil could just melt away. But if those 10 ships were just political theater, you can bet Brent crude's going to take another shot at that $110 level. Okay, now let's connect the dots. How did that oil shock absolutely hammer the stock market? Well, that spike in energy prices was a direct trigger for the sell-off, pushing the Nasdaq into a full-blown correction.
And just so we're all on the same page here, a market correction is just the technical term for a drop of at least 10% from a recent high. It's a pretty big deal, a sign that sentiment has really shifted, and it's exactly where the Nasdaq is this morning.
And man, the damage was brutal, especially for the big dogs in tech. Just look at these numbers. Meta down almost 8%, AMD down 7.5%, Micron almost 7%. These are not small moves, folks. This was a significant, broad-based rout in tech.
You've really got two big engines driving this sell-off. First, that spike to $108 oil ignited serious stagflation fears. That's that toxic mix of rising inflation and slowing growth, which would totally trap the Federal Reserve, leaving them with no room to cut rates. And second, you have tech-specific problems like regulatory heat and ugly earnings revisions just adding more fuel to the fire.
All right, listen up, because this is the number for today. The key level to watch is 6,400 on the S&P 500. This is the line in the sand. If the bulls can defend this level, maybe the market can find its footing. But if it breaks, the next major support level isn't until 6,200.
And as if all that wasn't enough to worry about, there's another major risk hitting the calendar in just 6 days. April 2nd is what the White House is calling Liberation Day, and it's when a whole new wave of tariffs is set to go into effect.
And you really have to see this as a stack, just one thing piling on top of another. We've already got the 10% blanket surcharge. The 25% auto tariffs that were signed Thursday are now live. And on April 2nd, this third layer, these reciprocal, country-specific tariffs, gets thrown on top of the pile.
Now, this creates a massive headache for the Federal Reserve. You see, the tariffs, which are going to mess with inflation, they hit on April 2nd. But the Fed's favorite inflation data, the PCE report, that doesn't even come out until April 9th. So the central bank is essentially flying blind into a potential stagflationary storm.
Okay, so with all these moving parts, what should you be watching today?
Here are the 3 things that are absolutely critical for the rest of the trading session.
First, keep an eye on Hormuz shipping news. Are more tankers actually moving today? That'll tell us if Thursday's move was real or not. Second, the S&P at the open. Watch that 6,400 level like a hawk. And third, any headlines about Liberation Day. The window for some kind of last-minute emergency deal is right now.
And just for a quick pulse check, here's where things stand this morning. The S&P is hanging on for dear life, just above that key level at 6,477. Brent crude is still way up there at $108. Gold is doing its job, holding up around 4,400, and Bitcoin is actually holding its ground pretty well despite all the chaos.
So look, if you take away one thing, it's this timeline. This is your roadmap for the next 2 weeks. Burn these dates into your memory. April 2nd for the tariffs, April 6th for the Hormuz deadline, and April 9th for that all-important inflation report.
These are the events that are going to steer the ship from here. 3 absolutely critical dates, and they all seem to be pointing towards a period of pretty extreme uncertainty. The big question is, do they all push the market in the same direction?